Good morning, everybody. Today is Thursday, June 18th, and this is the pre-market analysis for QOL Trading. Welcome. Welcome the people that are always here, and also welcome to any newcomers. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. You can go to our website, and you can put your name and your email address in there and get our weekly newsletter that we put out on Sundays, and it's free. We've put out 13 editions so far. Pretty much goes over the week in review and everything that's that we're looking forward to in the week ahead. In the you can find these in the descriptions down below, but also here in the chat, you can join our Discord community by hitting that link to WAP, and it is a free community. And if you do want to upgrade into our trading desk, we do live trading from 9:30 a.m. to 11 a.m. Eastern time every day. In there, we pretty much go over options trading, and I answer any questions that anybody has. If there's things that you want me to cover that I don't cover in my pre-market analysis, drop me a note, and I'll be glad to take a look at it and give you some support and supply and demand levels. However, I do not do anything with penny stocks. So anyways, that being said, let's get into it right now. We had some data, I think, that just came out here. Philly Fed manufacturing 10.3, and then unemployment claims 226,000, so a little elevated. It doesn't hurt things. I think right now, bad news is good news for the market. Good news is bad news for the market. So we did survive the first Fed speak from Kevin Warsh yesterday. Really no direction, just a little different with his hesitance on giving any kind of forward guidance. We also went over the dot plot, didn't put a lot of weight in that. For those of you that don't know what the dot plot is, it's an anonymous plot of where the current board or the Fed sees interest rates by the year end. So it flipped. So current doesn't mean that it's going to be etched in stone, but it did flip from a rate cuts to now rate increases by the end of the year. So something to pay attention to. But so far so good. The market kind of shrugged it off when when he was speaking. The market sold off, which to me, I think it's a given. I think the majority of the time that these Feds speak, the market sells off. Definitely when Powell was speaking, that's for sure. So we'll see what happens. First day, he had to get his feet wet a little bit. So we'll see how it goes in the future. I would suspect that he's going to have less press conferences than in the past. So we'll see how that goes. Anyways, let's get into it. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. So let's get into, what is the first thing we're going to start here? Let's go with the VIX. So the VIX closed that gap yesterday. He had a nice gap down, and then it closed it yesterday during the day when the Fed spoke. So we still have some open gap downs, 25.74 from April 8th, and then we also have that last gap down from March 30th, from when this big rally started. And we'll see what happens. If we get closer to that, I think at some point the market will flush a little bit, and then get things balanced out once we hit those targets, and then we can kind of get that resistance and pull back on them. We do have a gap down this morning, so be prepared for that. So I wouldn't be surprised. I think that the overall market is still intact. However, I would not be surprised with some pop and fades this morning. We'll see what happens. The market is up significantly, actually. Let me just see here. Pre-market, NASDAQ's up right now about 460, and the ES is up $61 right now pre-market. So we'll see. But if you look at the individual stocks, that's your true tell to see, because right now with the S&Ps, you have like 7 to 10 stocks that control the index right there. So let's take a look at oil, see what oil's doing right now. And this is, by the way, it's all we're also talking about the deal being signed with Iran, but nobody really knows the body of that deal yet here. So Oil right now, it's holding the 200-day moving average at $73.58 a barrel. I'd like to see us get down to the 67.83 from that gap up from February 27th. We do have a gap down from June 15th at $84.34 a barrel. So I do like it being flat, but the news of the straight being opened is definitely positive for our pocketbooks at the gas pump and negative for the actual price of oil. So anyways, let's get into the ES. Again, if you're new to the channel, hit that thumbs up button, like this video, and subscribe to the channel as well. ES as well. What we're looking at, I got the wrong ES up here. Sorry, people. Here we go. So we had a gap up from the 15th. That got filled yesterday, and now you've got the support. It's just above the 20-day moving average right now. Sitting, I would say, probably 75.53. So if you do get that push, I would suspect that you get, if you do get a push into the 75.99, that you'd get a little resistance right there. I think it's important probably to hold these pre-market lows at 75.30. If you lose that, I think you come back down here and you're going to at least come back to yesterday's close. And then if you lose that gap up level at 74.98, you'll probably test actually yesterday's lows. Here's the pre-market lows that I have right here. And then yesterday's lows will probably test down here at 74.72. If you lose 74.72, it's an open space down here to come down here and test June 12th low at 74.2744. You do have the 50-day sitting at 73.94 as well for some support. Let's take a look at our point of controls here. We do have an open point of control down here at 73.6342 as well. On the upside, I would not be comfortable being long unless you get above this 75.99, call it 7,600. If you get above and hold that, I think you push into all-time highs. Okay, let's get into the Qs. Excuse me, let's get into the SPY first. So same thing on the SPY. All these gap ups, they got filled yesterday when Worse was speaking. So do we have any point of controls? Let me see if we got a point. We got a point of control at 757.70. That is from the 4th of June. I would say right now, while we're below this 20-day moving average at 746.80. Let me get rid of this. Oh, there we go. 746.80. In order to be long, you're going to have to get above that. You may get some resistance there. If it rejects the 20-day moving average, you'll probably come back down here and test this high again at 743.46. You could see this break and retest level, people. I mean, this is a perfect example. You broke a high from May 15th. You came back down, you tested it, and now in pre-market, it's respecting that level again. So you could use this level as support, not a bad level. We're kind of caught in between this 743 and 746 level of the 20-day moving average here. In order to get long, you got to get above the 20-day moving average, and then you move higher. If you move higher, oh, look at that. We do have an open point of control from yesterday, so we'll mark that. So yesterday's. So if you do pop right now in the morning, I would say you get some resistance here from this point of control at 750.25. And then if you can get above that, then you can pop up here to the 757 level is the next level that I have for resistance, or for some supply areas, right? On the downside, if you lose 740.96, you're coming down to 731.75, right? Not a lot here for support here, so that's my next level there. Let's get over into the NASDAQ. NASDAQ, same thing, people. Let me make this bigger for us. Same thing, filled our gap up from the other morning. I'm going to remove this now because that's done. We are above the 20-day moving average on the NASDAQ. We're above the close from yesterday. Very positive there. I would say line in the sand, yesterday's high. Got to get above yesterday's high. Ooh, excuse me. Got to get you up above yesterday's high and hold in order to be comfortable feeling long. So 30,545 is a level to get above. If you get above that, then you can push towards May's high at 30,826.25, and then you'll probably get some resistance. That's actually a point of control as well. And so we'll mark that as a point of control from the 16th. So, okay, and we're moving forward here. So if you get up there, you're going to get resistance here. Let me just clean this stuff up here for me and move that on the left-hand side so it's not clogging this up there. Okay, there we go. So definitely, you know, this is going to be a speed zone here, people. If you can get above yesterday's high, maybe even the pre-market high, that level right there, I would say 30,584.50 is a level of confluence here. If you can get above that level, then I think you're going to push here. This all becomes a speed zone here, right? So watch that level there. On the same side, on the flip side, everything that happened here in pre-market on very low volume, that could be a major speed zone as well on the downside. So I would say if you lose 30,280 speed zone, you're going to come down here, test this 20-day and yesterday's close again. If you lose that, you come down here. We did not quite hit this point of control at 29,903.23, so that's still open on the books here. I'm going to get rid of this gap up, so we'll get rid of that, clean things up there. So this pre-market high from yesterday, that's a level that you want to watch there. So you may get some resistance up here. Put these levels on your chart. There'll be some strong levels here. People use the pre-market high and low as levels of, you know, entry levels and also support, supply and demand levels as well. So big, if you can get above this and hold, you're going to push back into this point of control that we have here from the 16th. If you get resistance here, you come back down here, you're going to test this pre-market low that we have here and then come back down here and test the close and the 20-day sitting at 30,165 this morning. If you lose that, probably 30,049 is going to be the last line of defense there. And then if you lose that, you come in, you're going to tap out this 29,903.23. If you lose that point of control, you come down here to test this June 12th low at 29,507.67. So again, put these levels on your charts and then use them when you're trading. Great. Let's move on to the Qs. Then we'll get over to Tesla, and now we've added SpaceX to our talk, and then we'll talk about the options, right? So here we are again, same thing, gap up filled, boom, remove that drawing, that's done. Oops, excuse me, let me get rid of this. Okay, that's done, that's clear. Yesterday's high sitting here at 735.68. Have to clear that in order to push higher. If we put on our point of controls, we don't have any open point of controls here from this week. Everything was filled out this week, right? You do have an open point of control down here at 723 from the 11th. So I'm going to say, got to hold the 20-day. It's positive that we are above this 20-day moving average at 725. I think there's a good chance you can move into all-time highs, 748.65. Going to have to clear yesterday's high, sitting at 735.45. If you clear that and hold, good chance to push into the all-time highs. For support, got to hold this gap up level, 721.34. If you lose that, I don't have much here. You're going to have speed zones all over the place here. You can put down here, excuse me, remove that. You can put down here the low from Friday. I'll put that on the chart. That'll be your line of support, your last line of defense on the downside here. If you lose that level, you're going to come down to this point of control at 723. So pretty wide range here, people. So you know, I would just use your levels, trade off your levels right now. So we're done with all the tailwinds this week. Everybody got through their first day with Kevin Warsh. So now it's trading levels. Now we're back to levels. Everything leading up to yesterday was fundamentals, and now we're back to using our levels. So put your levels on your charts and trade off your levels, right? So you can, right here, I think right now, if you lose 721.34, I think 711 is going to be in the makings right here. I don't have a lot of support down here. So that's going to be it for our broader markets, SPY and Qs. So let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. So I've got some interesting levels that I've been toying with right now. So here is your line in the sand for today. You have to, in order to be long on Tesla, you got to get above this 402.88 level. This yellow area here is my level of 220-day exponential moving averages. So we're kind of in this range here. So you can use these levels also for support and resistance. So I'm going to say if you lose, even though I've got this as a demand level, it's the first demand level. So it's kind of a moderate demand level here. So this is where your medium range level is, and then this is where your major demand is down here. So if we do lose all these levels down, this, I would say today, you're probably going to get some resistance up here this morning. But if you do plow through it, you can come and come and test this 408. This 408 is really going to be that line in the sand. If Tesla can push and get above this 408, then we're pushing back into this 417.66. Actually, we're going to be pushing into this 414.5 level. So you could see where we've got that you've got that 20-day exponential moving average sitting right in here. You also have a low. You have a low from the 15th at 407. So break and retest, people. If you break a low, you come back up here, test it. You're probably going to get some resistance because there's going to be some supply up there. And then on the demand side right now, if we clean this up a little bit, let's just get to a clean point of control. Where are you? There you are. And then we'll 30. Let's go to 15. I don't have a lot down here, people. This is going to be a speed zone here. If you lose yesterday's close, 396.38. You got 393 as your line in the sand. If you lose that, I've got 390.76. And then down below, and then if you lose that, you're coming back down here to this regressional trend line that I've got here from October 2nd from 2025, sitting at 387.52. However, on the upside, if we clean this up here and let's just clean this up right now. So speed zone right here in this area, I would say this is pre-market high right now, 399.41. Going to have to get above that. And then your low, if you lose 397.16, you're going to flush out, right? So let's get in here. Yeah, these are going to be your major levels right now. So you're going to need to really hold this 396.85 today, right? In order to get some more upside. If you lose this, you're going to flush out. I'd say if you lose 396, you're probably going to flush out to at least 390.76 today. And then the nice level right here of confluence at 387.57. On the upside, if you can get above this 463, you're really gonna have to get above this 402.97. So you've got this upper end regressional trend line that I've got here since May 27th of this year, right? So this is going to give you some resistance as well, 403. But your real true line in the sand of resistance, you got to be patient with these trades, people. You don't necessarily have to take a trade. Let the market do its thing. And when and I'm guilty of that myself. When I first started, I couldn't wait to click the mouse button. Now, if you learn, you have patience and let the market come to you. Be a fisherman. Drop your line in the water and let the fish come to you, right? So these levels right here, this big sell-off here, this is going to become a speed zone if you can get above this 463 level. I'm a little wary of this 401.68 level, so that'll be, something to possibly give you resistance to. You could see yesterday how the market, when Walsh was speaking, it kind of rejected that area as well. So pretty tricky trade today. Overall, if you look at Tesla, it is still just trading in a range. So here's our supply and demands. Put these, let's see, it's maybe a little clearer for you. Let me just clean this up. All clean. Okay. Put these levels on your charts, people. Here's the 200-day moving average. You can see it's trading right in between this 200-day exponential moving average and the 20-day exponential moving average. So you could trade off these levels, maybe get along here, have your stop just below this 393 level, right? So you got a $3 stop, pretty vast, right? But I would wait to see if you can get above this 402 level. If you can get above this 402 level, I think you can get a clean shot up into at least this 412. 408 is probably going to give you a little resistance also, because that's the upper end of the this. This is a daily. What you see right here is a daily 220-day exponential moving average. So take a snapshot, put this on your charts, people. This is some pretty lengthy work that I put into this. So you could see yesterday this held the second level of demand. And so now your next line of defense right here is right down here. So if you're really patient and you don't necessarily have to trade every day, so put an alarm down here. If the market fades off and it flushes out to this 373 level, that's what I'd be looking to take a long. Or on the flip side, looking for pop and fades, getting up to this 417.44. Put an alarm up there. If the market hits, go back to your computer, and then you know where you're going to put your, you put in your trade, and know where you're going to put your stops, right? However, pay attention to all this. This is all speed zone people, right? These are people that are short. And now if the market starts pushing up in here, yeah, I have it as a red zone, but you have to be prepared because at some point these shorts, they may have been closing out some long positions, but there's also a combination of people closing out positions and taking new positions. So then if the market starts to rally, these shorts are going to say to themselves, I may be wrong and I better start covering. Well, at that point, if they're covering, everybody's buying and nobody's selling. So that's when you're going to get that short squeeze. So here's where your real short squeeze will come into play. If Tesla can really pop and get above that 430, then we could start pushing back into our, going back towards those new highs. But right now, I think you have some levels here. You got some point of control levels. Let's go over those two before we got cut out of Tesla today. We have this last point of control that I have down here it's still open at 433.07, and that's from September of 2025, right? So that's the level that's still open. We do have some open point of controls up top, and you can see they line up. They line up with this new supply and demand that I put in here, right? You have that first point of control above us that's open at 424.39, and you can see it's a supply area as well. If you push through that, I've got a second open point of control of 444.31, and that lines up perfectly with the beginning edge of this supply area as well. And so if you get above that, though, here is an open point of control, our last open point of control above us, and that's from December 26th of last year at 478.39, which is by the all-time high. So again, people, put these levels on your, take a screenshot, put these levels on your charts. Let me see if it's a 5-minute looks a little better for you. See, as you go to the macro level, it looks a little clearer for you. So anyways, let's get over, before we get into the options, let's go over SpaceX really quick. I want to talk about that. SpaceX, here we are. So not a lot of data yet, but the best I could do right now is take a high from our from the opening day, and then you've got I've got an open level at 150. So and then you've got a low from the 15th that you can use. So I'm using this low, so you could put these levels on your charts as well. You can see that this high from the 15th, that's coming into play right now, right? So I would say not looking long unless you're above 195.60. If you do get that, then maybe you can start pushing into these all-time, or maybe at least yesterday's high, right? 214.21. On the downside, if you lose 176.52, you got 168.35, which is the low from Monday. And then if you lose that, you've got this the opening price at 150 that was on the opening day, right? So if you go back here, there's really not much that you can go by here. Look at the wickiness. And why is there a lot of wickiness, by the way? I went over this yesterday. The float, it's only about 70 billion. Now you say that 70 billion, oh, that's a lot. Well, compare it to NVIDIA's float. It's 1/5 of NVIDIA's float. So what does that mean? That means that you're going to have more violent moves, meaning supply and demand. If there's only one car that needs to be sold and you have 100 people that want to buy a car, what's going to happen with the price? It's supply and demand 101. So the price is going to go higher based on supply and demand issues. So same thing. Big moves, trade your zones on it. I was toying with the options, and the options on SpaceX, they're moving pretty good. There's a lot of volume in there. I don't know if I can see a volume train. Let me see if I could see from volume from yesterday. It wasn't coming up yesterday, but let me see if there's something that comes up today. So we have, let's go to the 17th. There we go. Okay, so we got, let me see here. We got a little volume here. So sorry for the stall, people. So here we go. So we have expiration date today. All right. And then, so if we look at the option chain, right now, because it's a new stock, they're only having monthly expiration. So the next expiration after today is going to be July 17th. So that'll help with your theta. Theta is time decay. That means the longer you're in the trade, that means that the premium price won't deteriorate that fast as long as you have time. So let's look at some of these volumes. Fantastic volumes here yesterday, right? Look at that. 63,000 shares, even 29,000 shares. And so today, the price for SpaceX is trading 190-ish. So you could put 190 calls up on your in the money strike prices today. Excuse me. So where is it trading right now? So we're trading at 186. So you could put 185 calls, or 185, 190 calls up here. Now I know that this, the last on this was $16, but it's going to be a lot less because the market sold off yesterday. So this is from, let me see if the 18th gives it to us. Okay, this is better. So this is more up to date. So you can see it closed, the 190 calls yesterday closed at $6. And then the 185 closed at $9. Those are going to be significantly lower today. But just wanted to go over the volumes with you to show you that there is some pretty good volume on here. And I would say it's only a matter of time before that they're going to have multiple day expirations on there. So watch for that. I'll keep everybody notified on that. I am playing with this a little bit. I have not done a lot. I just wanted to see how the market moves because every equity moves differently, right? So that being said, let's get into the Tesla options on what we're going to do for today. So I'm going to start today with today's expiration date. I'm going to start with probably going to lower this to, because we are below 400. I'm going to start with the 400 calls today. So you can see the premium closed at $2.87. We are higher from the close yesterday at $3.96, but not by much. So this premium price is probably going to open up in the $2 range. I may switch it as the day moves on. And then as far as the put price, I had the 400 puts up here, but I want to cheapen the premium price a little bit so my cost basis is a little cheaper. So I'll probably going to start with I'm going to start with 395 puts. So now watch the premium when I change this to 395 puts, it's going to drop, right? So it dropped almost $3, so it's $3.65. So just on a basic, just for very basic options trading, no spreads, no iron condors or calendar spreads, just a very basic strategy for trading options. Okay, so start out, if you're new to options, you start with a one lot. Now, what happens for your options up here, the way I have my platform is very basic. I've got my 1 minute chart right here. And on my 1 minute chart, I've got my new indicator that I built. And it pretty much tells you, when to get in, when you should look at getting into a trade and when you should possibly look at getting out of a trade. And everything that you're going to see on here right now, it's all code driven. I don't write anything. This is all happening live when the markets are trading. So if I think the market's going up, whatever the equity price is doing, this is what the premium price is going to be based on that. However, if the market, I have my calls up here, my call active trader up here, and I have my puts down here. So if I think the market's going up, I want to execute a call. If I think the market's going down, I want to execute a put. And you're buying the premium price, which means that if I buy a one lot here at $3.65, it costs me $365. That's my cost basis. Means I cannot lose more than $365. Okay. So from here, if the market goes down, this premium price will start to rise. And I usually try to trade anywhere from in the money to out of the money by one strike price. And what does that mean? That means if I'm buying a put and if it's in the money, that means that this strike price for a premium needs to be higher than the actual equity price. That means it's in the money. Why? Because I'm betting that the market's going to go lower and the strike price is telling me what my intrinsic value is going to be. So 395 is the put. If the market's below that and it keeps going lower, this premium price will rise. So the delta means it's anywhere from 0 to 100, and that means that for every dollar the equity price moves up or down, the premium price will move down based on the delta. So the deltas are typically that I trade are anywhere from like, 35 to 40 cents. So for easy arithmetic, call it 50 cents on the delta, which means if Tesla goes down $1, this premium price will go up 50 cents. So what does that mean monetary wise? If I buy a one lot, whatever the premium price is, doesn't matter. It could be $10, could be $1, could be $3. And this goes down $1, this premium price will go up 50 cents. So that meant if I bought a one lot and it goes up 50 cents, I make $50. Now, obviously, we're trading to make more than $50, right? So you do the multiples. So if you did a two lot and it goes down and it goes up 50 cents, you make $100. And you did a three lot, you make $150, etc. Okay, and that's very basic strategy. Now, what I do on actually, let's do this. Let me show you what the indicators are doing here. So, I don't want to do that. Let's detach. Okay, so we got. So I have the indicator on the Mag 7 stocks, and we could go over them. Tesla hit. No problem yesterday if we maximize it. This is all a 1 minute chart, and the results on these, it hits your price target 90 to 96% of the time. So on Tesla yesterday, it hit your first price target at 8:31, the first minute after the market opened. And what is this? It's a 1 minute, and what you're seeing here is an 1 minute range. So the range yesterday was 400 to 401, and it hit that first price target really quick. It was a very small 1 minute range, right? However, that being said, you made $2 on that. And so what did I just go back to what I just said? If I'm trading a delta that's 50 cents and it went up $2 and I bought a one lot, I made $100, right? Period. Easy. It's that easy. If I bought a 10 lot, I made $1,000. Okay. So easy arithmetic. So now let's go into, let's look at the other ones now. I think they all were very successful yesterday based on the volatility in the marketplace. So this is NVIDIA. By the way, if you come and you join the Discord community, we go over this, this indicator, and I'm very close to starting to market it. We're done with beta testing right now. We're just figuring out if we're going to market this on TOS. Thinkorswim platform has been working fantastic, actually. Here is the trading view, rather. This is the trading view. Trading view gives you a nice little chart on the bottom here. It gives you the range, and it tells you the mid-range, and then it tells you the opening day range, and then it tells you the range quality, right? And then it gives you a grade, whether you want to be long or short. It tells you the trend, and then it tells you the state, if you're going to be in a trade or out of the trade, right? So what this does for you, and you can see it gives you the same signals on the trading view as well, where it takes a lot of discretion out of the market, right? You still have to make a decision on your own. You have to do your own due diligence. This is for educational purposes. However, it gives you a great read. Let me just make this bigger for everybody here. It gives you a great read on the market, and it's telling you when to exit a trade. When to get long. It tells you here, get long. It's telling you to exit here, right? And then it tells you, all the signals that's firing all day long. Now, the problem with this is if you have a very small range of a day, it's going to be firing all day long. But you can see it's giving you your exits, right? I call this the yellow square of death. It tells you when, whatever direction you're going in the trade, exit that trade. So TradingView seems to be working very nicely. I don't mind that. However, I have this running on both Thinkorswim and TradingView right now. And you can see Thinkorswim is giving you those same cleaner. To me, I think Thinkorswim is cleaner. But I'm having trouble with this, getting them to authorize the script. So nonetheless, it's still working out fantastic. This is NVIDIA yesterday. You could see NVIDIA. It was telling you to exit your call right here. And then you could see later on in the day, NVIDIA hit its price target down here. So what you're seeing also, just so I can describe it, your green is your upper range, your red is your lower range. This dotted line is pre-market high. This yellow dotted line is pre-market low, okay? And then this is the low from yesterday. And then right here, this this solid purple is your first price target. This dotted purple is your second price target on the downside. On the upside, you have a solid blue, which is not blue. It's more, I think it's more aqua. That's your first price target on the upside, and your dotted is your second price target on the upside as well. So it's all of this is plotted immediately. I don't have to sit here while the market's open and start going back and forth. So that is NVIDIA. Let's get over to Apple. We'll do Apple real quick, and then we will move on with our weekend people, right? So let's go here. So you can see same thing with Apple. Apple hit its price targets there. Once this is a 1 minute range, right? So once you break in a level on 1 minute range, you take your trade, right? You have to. That's where you have to come into play. The signals are going to say, hey, you could take a trade here. Then you have to make that decision whether you want to take that trade or not. But you can see Apple after actually right here is when it hit the first price target. 21 minutes after the market opened, boom, and then later on in the day, it hit your second price target at 940. It actually wasn't even later on in the day. And then let's get over to, we'll be done with this shortly. Let's go, boom. That was an easy one there on Meta. No problem on Meta. You find that you hit your first price target here at 20 minutes after the market opened, people. I mean, this is great. Every day it's working out fantastic. The 1 minute it's working out that it's going to hit a price target. Once you can recognize how to read price action, everything else is going to fall into place, right? Because you're going to see, okay, well, I have my price target, and then with your probabilities, knowing that it's going to hit one or the other price target 93 to 96% of the days, you're in like Flynn. You put your trade in here and say, okay, well, I know where my price target's going to be because I know that 93 to 96% of the days it's going to hit that price target. So what happens? It doesn't mean you go all in and mortgage your house. It means you put in your trade based on your risk, based on your capital that you're trading on, and you put in your trade. You know where your stops are going to be, and you know where your take profit is going to be. So if I put in a trade right here and I say, okay, well, I'm reading price action and everything is down. I'm looking at the broader markets. I put in my trade right here. I have my stop up here if I'm wrong. And then, because what happens a lot of the times, you could be going a direction, it doesn't hit the price target, and then it reverses and goes back up here and hits this price target, right? So anyways, for yesterday, Google, that was a winner for Google. And Google, by the way, Google and Microsoft seem to be the ones that struggle the most on hitting the price targets. But yesterday, it's going to be an easy one. Everyone hit yesterday because you had that big volatility, so I don't want to mislead anybody. Boom, but this hit right away at 8:35, 5 minutes after the market opened. Amazon hit its price target. Boom. Microsoft, we'll finish Microsoft up, and then we will get on with our weekend. Boom, no brainer on Microsoft. You can see, but this is great. This is what I want to show you right here. This yellow square, I call it the yellow square dot. They call it right here. It told you early entry. So you could have gotten in a trade right here, but then once you see that yellow square, it's telling you may want to think about getting out of your trade. When I see this yellow square, I'm not even hesitating right now. I'm getting out of my trade if I'm wrong. And then you could see it starts to fire off all different signals, and then boom, it gives you that golden entry right here, and then boom, fell off, and then you were good to go. So anyways, people, that's going to be it for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. And then also on the links to the right, make sure you go to the website, QOLtrading.com, and put your name and email address in there, and I will send you the weekly newsletter that we put out on Sundays. And that gives you the weekend review and what to expect in the future for the next week. I pretty much go over everything that happened during the week, from geopolitical information to Tesla. Mostly I cover Tesla. I cover Tesla a lot because that's the most liquid stock that I trade for options, and I've been trading it for years. And then also importantly, go down and join our Discord community. It is free. However, if you want to upgrade into the trading desk of where we do live trading from 9:30 in the morning to 11 a.m. Eastern time, you'll have to pay a subscription fee. However, there is a free day, money back guarantee. So you come in for a day, and you don't like it, then no worries, no cost out of your pocket. And then that's about it. So again, be aware, no trading tomorrow. Markets are closed. So keep it light. Don't ruin a 3-day weekend. And also, if you have any questions, feel free to drop them in the comments down below, and I will do my best to answer them. Aside from that, enjoy your weekend. Have a safe trading day, and I will talk to everybody soon. Take care.